Good evening, all. Ira Epstein, and here we are with your metal market wrap-up. And this wrap-up is for Thursday, blowout day to the downside Thursday. Interesting day, believe me. And it is the 15th of June, 2023, 5:55 p.m. Couple of warnings. Number one, Juneteenth. That takes place on Monday, a national holiday. Remember this. So you're going to get the holiday hours. You're not going to have the stock market trading, and you have in the stock indices triple witching taking place in a bunch of markets. So just beware. It's going to be a wild day. As for the Fed's actions yesterday, as I expected, and it happened again, this has become a pattern. The market doesn't believe the Fed. And full of TV today. It didn't matter the station you were watching. People were coming out and explaining to you why the Fed is wrong and why Fed had probably made its last rate hike and that the market had euphoria for that today. Well, first off, these markets have made up everything. I want to use the word everything that they had lost from the time, what was it, near 14 months ago or whatever, that the Fed began raising rates. It typically takes between a year to 18 months for you to get the whole impact of that on the market. Just keep that in the back of your mind. It could be anywhere in there, depends what goes on within that time frame there, but that's the gap. We are in the latter part of that right now. So maybe you're in the last 3-4 months of it. Doesn't mean you can't go higher. But as you already know, you're seeing that it's getting harder to get loans. The consumer, is he spending as much? We haven't seen that. We have seen regional activity wobble in many areas. We get one report that's a little better than others that aren't as good. Remember how bad they were in New York recently in industrial production and other areas of the country. So you've just got to take it all. The stock market is not everything else. And this market is running off 7 to 10 stocks that have gone bananas with obviously with the tech programs, with what's going on. You know who they are. I'm not going to go into it. What did it do today to the metals? Well, gold went into its washout phase, but it came back because the dollar still got hit. And if you really look at bonds and notes, they're not falling. They're doing what I was hoping they would do. The back end is starting to say, maybe I don't have to add any premium at all. In other words, I don't need to add yield. The front end's going to be whatever the Fed's going to do with it. That's where they have control. So when we get over to these markets, and we'll get there in a minute, just remember you're dealing with that. On the energy markets, anything can happen here. Our Secretary of State, Mr. Blinken, is headed to China. This is a good thing, not a bad thing. I don't want him to come back with deals and everything's done. That's not it. This is the beginning, hopefully, of getting the thaw. He may not be able to do it. He may walk back snubbed in a way that we don't know, and that'll be that. On the other hand, we don't need the U.S. and China to go to war. I read a study as to what it would cost if China put a blockade on Taiwan. About $3 trillion worldwide. Can you imagine that? Think about it. Chips you don't get, everything else. Got to bring this thing under control. Plus, their economy's hurting real bad. They don't need enemies right now. They need friends, and they need foreign orders. That I don't know that they're going to get, not because they don't want to be done. The economies are weak. When you look at the gold market, this is a weekly chart, and I know the market has come down hard. You've not done any damage on this chart. You're coming back into the support zone on a closing basis. Now, I do know that the market popped through the bottom today of everything. It was the washout day. This is where you took everybody out of the market, but the market lasted there, a couple of hours? I'm not being facetious. I mean a couple of hours. And then it climbed back into the sideways action here and ended up the day near unchanged. And you can see how the action is. Why did that occur? Well, first, the trend is down. We knew that coming in. You don't need me here to have today's action on the chart. Let's see if I can remove that and get you to yesterday. We already had the downtrend. This was today's action. This is with tonight. Let's go to the next chart. I've been saying, where is the key resistance? And I've been saying it to you, the 100-day average and the 18. But I've pointed out that if the market's going to let go, One of the potentials might be the 200-day. That's awful far away. More likely, I was looking for support. Go to yesterday's tape at the lower Bollinger Band. And we've been there. You tried to poke through it. You couldn't do it. So this is a rejection of the decline. This does not mean it's turned bullish. This is a rejection of prices going sharply lower at this point in time. Now, get back through today's low on a close, and I'll say no. The market was able to overcome it. But so far, it's like a date. The girl said no or the guy said no. Either way, it's a rejection. When you look at August gold, July silver, okay, you're still staying here where the silver market, yes, it's bounced against it. In other words, it gave up a little bit of the gains, but it hasn't gotten back over the 18-day average, so it's still stronger than the gold. And you can see this. Look at how the market, it came down. It probed today the 100-day average in the 18, but it got right back over it. None of these are in a buy configuration. Could you argue that gold was in a sell? I think you could for a couple of hours. That's about it. I didn't want to do that. Now, in the copper market, we know what's going on. Today, China did another series of rate cuts. This is all leading to something they have to do internally. I don't know what it is. Nobody seems to have a handle on that. I would think it has to do with property. I would think they've got to come up with something on taxes to give a break for the consumer there to buy things. What they really need are foreign orders. Unfortunately, most economies aren't at that hump where they're doing it because, be it our bank, be it the European Central Bank, the Bank of England you'll see next week, we're still in tightening modes. The good news is the U.S. is coming out of that. Blinken going right now is excellent. Excellent. You want to get it to the point where the U.S. is coming out of this tightening mode and the economy is doing better, and that's when orders can happen, if they're your friend. If they're not, it's bad. So the timing is right. Don't know if anything will come of it. In copper, if they do something, and it could be over this weekend when we're all on Juneteenth and whatever, you could drive the market back up to the 100-day average in the Bollinger Band. You have an embedded reading. Support is now going to be where the initial resistance was, the 200-day average down to the 18, and that 18-day is going to march up quickly to higher pricing than this. In the platinum, here too, you finally got to the Bollinger Band, and you don't have the embedded reading. Now watch this with me, right? Don't count tonight. Embedded, day 2, day 3. You have your embedded reading. Day before, not so. You had your 3 days, and tonight you're losing it in a big way. That tells me that this market is not a sale, number one, on the rally. Number 2, the shorts covering was the proper thing to have done when this occurred. Resistance is most likely back up at the 18-day average. It could be here, but markets, I generally tell clients not to sell the first test of a 200-day average. In the dollar index, you know I've been a bear on the dollar. I've been talking about this forever, and this type of pattern did not help me to do anything. Now, this all got set up by a very important chart pattern called the outside day. You had an outside day up. When you take out the low of an outside day up, and there's a certain set of rules in my course on my website at iraepstein.com under education. If you take that out, you're probably going to the closest moving average or Bollinger Band. It's exactly what the market did. Now you're walking into, this is the 13th, now you're walking into whatever the Fed does. This is the 14th. And today, what is the reaction to all this going to be? Because you held the 100-day and the Bollinger Band. Now it's got to make a decision. Is the market bullish, bearish from what the Fed did? The decision was made. Do you go short under Bollinger Bands? I teach you never do that. But you've broken the back of the market. Let it restructure itself. It will. But I think you want to approach the dollar from the short side. The one thing I agree with the naysayers on is there's not a long way to go on further rate hikes. That I agree with. Are they over? I don't think they are. I think that the Fed would be hard-pressed to make it over unless what the economic data says. You should end this. Why? Core CPI instead of 5.73 or 5.3. drops, gets under 5. That'd be impressive. We saw today the unemployment numbers wobble. In other words, they're climbing. That's what they want to see there too. So we have events taking place. It's the speed they're doing it, and that's what the problem is for the Fed. Now, your problem is how do you keep up with all this? And whether you trade ETFs, you trade in the futures markets, first thing in the morning, I do one recording for you at approximately 5:15 a.m. Central Time. I cover 40 charts on the futures. I then wait for the money to come into the stock market, and at 9 o'clock I start recording the next video because I want the first half hour of trading. If you take a look at what time most U.S. economic data comes out, it's typically from 7:30 to 9. I want that in so I can tell you, hey, here's these reports, here's what they did, here's what I think you do in the market. So you're going to get fundamentals, you're going to get technical. We'll look at daily and weekly charts. One of the newer features I'm even adding, I'm going to track now on the weekly charts, long-term recommendations. I think that's important, and that's going to be a revision that I start this weekend. So if you'd like to see this, it's really simple to get all this done and for you to do it. A couple of ways. Number one, if you're watching me on YouTube, just click the blue button here. Take you right to it. If you're not, just move your cursor to the top up here, hit the icon there, or go to iraepstein.com under the word research. In the meantime, you have a great weekend. I don't know if I'll put out an update tomorrow night or Saturday. I'll get it done for you. But remember, the markets aren't open on Monday primarily. Sporadic trading. It does open Sunday night in the gold market. It'll trade until morning in the futures and then reopen at 5 p.m. on Monday. My clients already know the hours. I'm Ira Epstein. Trade well. I'll see you in my other updates tonight. Take care.